Everybody, this is Jim at SP500chart.com. It's about 4:20 on April 2nd, 2013. We're going to take a look at the S&P chart as well as briefly take a look at some other major indexes as well. Before we get started, I want to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy that draws lines on charts. So let's take a look. Okay, looking at a 30-minute chart. We got over this resistance area at about 1565 again today. Never did get more than about a 0.6% over this line, but I think the second time will more than likely be the charm, because it looks like we may have established a new little channel, or sort of a channel of sorts, between these two blue lines. So what it's kind of looking like is that whereas we were in a very steep ascent coming off of the late February bottom with this inverted head and shoulders pattern right here, you see how steep that is. We broke trend, both breaking out of this steep channel as well as breaking once again the less steep longer term red channel. And now it looks like we're going up at a little bit more lazy pace, but still headed up. What's interesting to note is how this was for about 8 or 9 days in early to mid-March. The S&P moved up almost like a zombie, just melting up, very little volatility. That was that period where I said it looked like if this bottom line were an actual physical object. It looks like the S&P was just wrapping itself around this lower line here like a vine. But now the vine broke loose, come down, and now we're starting back up again. But, as I mentioned, at what appears to be at this point to be a less aggressive pace. And it's also conceivable, as we look at the 1, 2, 3, 4, 5 touches or so we've had on this top line and the similar number of touches we've had on this bottom line, depending upon where you want to draw this, you see we're getting a little bit of wedgie shape to this particular channel. I don't want to be too strong about that, because many there are not enough super strong data points, and they don't all line up. So I could put this right here, which is still slightly converging, but not really enough to make that much of a difference. Or we could draw it here. Now this looks more like a wedge, and I have to be frank with you, it's really open. Totally open to interpretation. So I'm kind of splitting the difference just to kind of be on the safe side. But with this move today, I think we are once again looking for the low to mid 1590s as a target from this ascending triangle. So let's just watch this bottom line. This is our support line, and this top line, this is our resistance line, and see what we get served up here. Frankly, that's about all I can show you on the S&P, but I want to show you a couple of things that I think are interesting, and you might want to take under consideration. A lot of people have been saying that the Dow Jones transportation index, the Dow Jones 20, is a good harbinger of things to come. Let's take a look at that. You can tell I don't chart the transportation average. Maybe I should. But it looks to me like we've got to something of a head and shoulders top here. Let's put this in a little bit more context. My neckline disappears, and you can see that this average has really seen a nice run from mid-November till now. And it looks like it should be ready to give back some of that. And it could be that this is the setup for that to take place. If we look at an hourly chart, draw a line under the last two significant lows right here, you can see that again. It looks like this break in the Dow Jones Transportation Average is signaling at least some weakness in this particular sector. And it wouldn't surprise me if we come on down to and get down under 6,000 in this, and then we just have to watch it. There is an alternative to my lines. There always is an alternative to my lines. And that is, we could be looking at a channel where these would represent the top and bottom line. But the problem I have with that is we still have this head and shoulders looking formation up here that should end up taking this bottom line down. So one interpretation of where support is already broken, and an alternate interpretation which goes back to the early January little dip here in the middle of January to the present level. So you can see where one might expect a little bounce here, but one might have expected a little bounce here and didn't get it. Let's see. This little pattern says we should be getting down under 6,000. And here's what makes that transportation average look even more interesting, is the Dow Jones Industrials has not even come close to the line that we just saw the transportation average break. So, wow, that is really interesting. And look here, the Dow is up 85 points today, the Dow 30. The transportation average is down 76. Let's take a quick look at the NASDAQ and then the Russell. NASDAQ, it doesn't look particularly bad, but doesn't look particularly strong either. You got to watch this line right here. If it breaks, then probably some stuff's going to hit the fan, because you can see we've got some longer term resistance lines, one right here that we are currently under, and then one about right here that we have not reached. So there are a couple of interpretations on this that make the NASDAQ look pretty bearish, if you ask me, and one of which is what we've seen since November has all taken the place in what looks to be a pretty clear wedge type pattern, and those usually have a bearish what's the word I'm looking for? They usually end up having a bearish final outcome, even though that's a nice move off these lows. And finally, let's take a look at the Russell. Okay, here's the Russell 2000, and what is interesting here is where I showed you the Dow Jones Transportation Average, and I mentioned that this line had broken. If we used the same data points, this line had broken in the Dow Jones Transportation Average, but this line had not. In the Russell, this line appears to be in the process of breaking. You can see if we go into a 1-hour chart and we adjust this line, we are just below it. appearing in the what really looks like the last hour of today's trading. So guys, that's just a couple of things to keep in mind there. That's where that line would be right there, I think. So this is certainly getting very interesting. But since our focus is more on the S&P, let's take one last look at that. The S&P doesn't look to be at all in the same kind of danger. Matter of fact, just for the heck of it, you can see if we go back to that same line, it's looked rough in the transportation average and in the Russell. Here it is right here, and S&P is well above that. So I believe this lower line right here really will be the thing to watch. I mean, we're looking at some other things too. We're looking at some smaller term channels, but I think this one will probably be the one that clues us in as to when that next down leg starts. So let's, for now, short term, look at this line as support. This line is resistance. Long term, I'm thinking we look up here at around 1600 as resistance, and I think we look at this longer term line here as support. But if this gives, and it's going to give at some point, but when it does, I think that will touch off a significant wave of selling pressure. So there's your video for April 2nd, 2013. Thanks so much for watching, and thank you for your support. Take care.